Good morning, traders. It's 8:02 a.m. Chicago time on the 15th of November 2016. It is Tuesday. Welcome aboard. This is another Trader Bite, early nourishment for your trading mind. The uh, the factors pushing us around this morning, overnight, the market has been quite stable, balancing, sitting sideways. The key news that came out was the German economy expanded at 0.2% Q on Q, missing the 0.3% growth, and inflation in the UK slowed down. And of course, yesterday the market found out that Warren Buffett was loading up on airline stocks, pushing those stocks higher: American Airlines, Delta Airlines, and United Continental. Other than that, there's really not all that much to talk about this morning. Retail sales came out at stronger at zero point 0.8 versus zero point 0.6, and import prices at zero point 0.5 versus zero point 0.4 in the U.S. As far as what we're looking for today going forward, we have business inventories at 10 Eastern, 9 Central. This is the prelim figure for September, 0.2% expected. We have a fair number of speakers coming out. We had Rosengren at 7:30 this morning Eastern, and then we still have ahead of us Fed Speaker Tarullo, uh, who is a voting dove at 9:05 Eastern, 9:05 Eastern, and ECB Speaker Nowotny at 1 Eastern, EU Speaker Juncker at 1 o'clock as well. At 1:30 we get Fed Speaker Fisher and also Fed Speaker Kaplan in two different spots. They're not speaking in the same conference. And so that's what's ahead for today. Let's take a look at dive right in and look at what we expected yesterday. Yesterday we were gapping up. The market had pushed to 74.50 overnight, extending the move that started on Friday afternoon with a higher low. So Friday we had a push down, pullback, and then we have what looks like a corrective move, a higher low. So the expectation was for continuation higher, and that's what we had overnight. Overnight, though, the expectation coming in was for responsive selling. I pointed out, as you see in this diagram here, or this chart, I pointed out that we are right in this high volume area over the last few days. We've built a fair amount of balance on Friday inside of a bigger day the day before that. So overall, we're stuck here. So the expectation was we would push to at least 2157. 2157 being the point of control of Friday and the point of control of all the last 3 days of trading. These 3 days, which make up this profile right here, and we would likely bounce and start pushing back out, and that's basically what happened. We ended up pushing lower, which means that the range up would have been lower. But we'll look at that in a minute. The secondary hypothesis is a push and bounce off of value high, which is at 2160. 2160 and a half, and then rotate back out and start pushing through to 2171.50, which is the statistical high range for the week and beyond. And then the third hypothesis would be a failure to continue higher, so push higher, rotate down, get back into the range, and cross the entire range into this low volume node down here. This is a very important area down here, and it continues to be. So again, here's hypo 1, and here's what we actually got. So we're looking for an open auction and a drop. So here we get the open auction. We get the open auction, and then it makes a second attempt. It pushes into the prior day's range, and it looked for a moment here like it was holding the value high, so that would be hypo 2 to start pushing up. That didn't happen. It started to push up and then it failed at 2168, found its sellers again, and moved back into the range, gave us a clean area to short against, and then it moved down into the point of control right here at the old 2157 quarter, 2156 area, and then it ended up bouncing back up and finishing in the middle. The profile was balanced and Gaussian. The value area today is valid. The value area here is 63.75 down to 57 and a quarter, and that's likely to come into play today. We are opening in range just on the edge of value right here. Who knows what will happen here over the next 22 minutes, but that's how things are shaping up, and essentially what the market has done yesterday is to come back into Friday's range and accept Friday's range. Notice the point of control has shifted up just slightly. Yesterday's point of control is inside of the prior day's value area, which means that which is a clear indication that we are in balance and waiting for the next rotation. So this is coiling between yesterday and Friday. This is coiling. Here's where we are on the overnight session. The overnight session made that balance even sharper. It's really a very, very compressed overnight profile with high kurtosis, and the volume has been dropping steadily. As you can see, it went from 299 down to 199, and we had some 300,000 plus days Globex sessions over the last few days, given the election results. So overall, the overnight session is not giving us much, and there's nothing to conclude from here. The inventory is fairly balanced. The market is trading at a delta of about 0. It's slightly above yesterday's close, so you could argue that the inventory is slightly positive and likely to balance down. But to me, we're inside of value. We're inside of the prior day's range, so there's not much we can glean from the overnight except to say that it is likely to consolidate on the open. So given that yesterday was inside of the prior couple of days profiles, I'm going to shift this profile forward and watch how and pay attention to how the profile is being built. So you can see here the point of control is shifting up and down as we move through, and we're filling in right in the middle. And again, this confirms or plays into the idea that we're still consolidating, and overall, balance is likely to lead to imbalance. This is a pretty balanced right now. We have really good volume in here, and it just tells us that we need to be prepared for imbalance coming out of here. I don't know if it'll be today or not, but there's this is a fairly tight consolidation here in this area. The market is definitely accepting this area, and it's likely to move out of here. That would be the next rotation. I would love to see it come down and retest this 2143 to 2148 area, take out this double bottom that we left behind on Thursday, and then start exploring lower to give us a little bit of volatility and therefore opportunity. But I don't get to call what the market does. So just understand that overall we're in a consolidation area here. We are forming a triangle. We've got good kurtosis, good compression on volume. We have a very, very prominent point of control and high volume node area, and it's likely to break out of here. This is essentially like a backdraft in a fire. It's sucking in oxygen to push out, and that's basically what things look like right now. So with that being said, there's not much more I want to cover here. I want to make this nice and quick. The expectation for today is that we are likely to open in range here. We're likely to test down early. We're likely to do what we did yesterday and then start to push up and then essentially consolidate for one more day. I don't see enough on the calendar to tell me that, hey, there's something we're looking for today that's likely to push us out of here. I expect more consolidation and a move to occur, driven by either the Globex session markets in Europe or Asia or something. But in the U.S., the bonds and notes are stabilizing. Did stabilize a little bit yesterday, and the market is waiting around to see what happens with crude and so on. Crude bounced up big overnight. Crude is up 2.82% on yesterday's close, uh, trading at 44.54 on news that Saudi Arabia is making another attempt to coordinate a production cut. And that could be the catalyst. I'm not sure, but it's hard to read into the market. In fact, I was talking to a 35-year veteran of the markets yesterday, and he, his answer was, look, I look at the long term, I look at swings, and I've become a day trader temporarily just because it is difficult to see what is likely to happen given the new political unknowns and what the market is doing with regards to Fed rates and such. He can't make long-term commitments in the moment. So that's how I view things as well. It could go either way. Although the overall trend, of course, is up. We are back in a bullish market. We broke the October high and are one-time framing up, or starting to one-time frame up on the monthly. So it's we'll see where we end up here in the next 2 weeks. We're in the middle of the month, so we'll see what happens. Secondary hypothesis is a an attempt higher early on to continue this channel up. We had higher lows, higher highs yesterday, looking for a push up, and then for it to come back down and fall back into the 2160 area, and then sit in here and then potentially start to move down into Wednesday. That's how things are shaping up. In either case, I don't expect it to break today, but if it does, then your targets are likely to be the 2178.50 is prior week's high, and of course 2180 quarter is a weak high that we left behind from from August, September, and then 2185 is the all-time high above. Okay, so I'll leave you with those thoughts. I can't give you much more than that. Hopefully, this is something you'll find useful to your own trading and can apply. Good luck, and I'll catch you tomorrow. Take care.